Hey, what's up guys? Welcome back to Show Me the Money. With less than a month to go before the US presidential election, the stock market seems to be watching as closely as most Americans and even investors worldwide. And for good reason. A Trump or Biden victory will benefit different sectors, and a sweep by either party could end the gridlock in Washington that has kept another coronavirus relief package from getting passed. Biden ended Wednesday with a clear lead in the polls, with the Real Clear Politics average of national polls showing 51% of Americans preferring Biden to 42% preferring Trump. RCP's betting odds average gave Biden a 64% chance of winning to Trump's 35%. Two new polls were released Thursday morning, and neither changes the calculus much. An Emerson poll shows Trump leading Biden in Montana by 13 points, while a Goucher College poll shows Biden leading Trump by 31 points in Maryland. Neither state is considered in play. There's little change in Real Clear Politics average of national polls and average of betting odds today. These polls do not capture the impact Wednesday night's vice presidential debate. And the next presidential debate, which is scheduled to take place on October 15, will normally be the next chance for Trump to make up the lost ground with Biden. Whether that debate happens, however, is unclear after the group that organizes the event said it will go virtual, and the president responded by saying he wouldn't participate. The stock market is taking it in stride. The Dow Jones Industrial Average was up 0.1%, while the S&P 500 was 0.5% higher. Based on several closely watched voter polls and betting markets, Biden will be the next president of the United States, vanquishing Trump in the election of November 3rd. Then again, election polls are notoriously unreliable, as we saw with the Clinton-Trump in 2016. Yesterday, House Speaker Nancy Pelosi rejected the idea of passing a series of smaller, so-called skinny bills in place of the broader COVID-19 stimulus measure she was negotiating before President Trump called off talks. Pelosi literally said that health is in the balance at yesterday's press conference. Pelosi also rejected the idea of a standalone bill for the airline industry, saying that talks on airline support were always contingent on a larger bill passing, and that an airline support could have been included either as a part of a larger package or passed as a separate bill along with the broader bill. But Pelosi stressed that they have walked away from the whole package, referring to the White House negotiators. Meanwhile, investors are acting like Democrats have a better chance of winning since a contentious September 30 debate between Trump and Biden. A positive coronavirus diagnosis for Trump may have sealed the deal. The odds of a Biden win in November have increased to 67% from a pre-debate reading of 55%, according to Bloomberg data. And the odds of Democrats taking the majority in the Senate rose 66% from a previous 55%. That could all mean a rotation out of big tech stocks into cyclical stocks, and investments that benefit from the expected extra stimulus a Democrat-led government will bring. Hopes for a big stimulus package have faded in and out over the last few days in a series of mixed messages from the White House. Trump at first demanded Republicans walk away from the negotiating table. Then he directed a series of smaller, more targeted deals, including one for the ailing airline industry. The status quo on corporate taxes in case Biden wins and Democrats gets control over the Senate will be significantly offset by higher state and local taxes, which will be more severe if localities don't get help from the federal government. All of this is seen helping stocks of regional banks, retailers, metals, mining, real estate, and industrials. Higher rates boost bank profits and help metal prices, and more stimulus could support consumer spending. On the flip side are Treasury and corporate bonds, the dollar and energy, as rising rates push bonds prices lower and the recovery weakens the dollar and oil prices fall. Technology stocks, the big winners of this year, could see a sell-off if investors move their money from the momentum trade into those cyclical and small caps. Stocks tend to do well when the 10-year Treasury yield rises 100 points in less than a year, and that has happened 8 times in the last 40 years. And the S&P 500 have an average return of 13%. The Russell 2000 gained 30%, and the Midcap 400 gained 28%. If we do the research, election years are not often the best times for stock market investors. Over the past 90 years, shares included in the S&P 500 have returned an average of about 8% a year. The 12 months leading up to each of the 22 presidential elections in that time have been linear affairs, returning just 6%. Investors tend not to care whether the victorious candidate is Democratic or Republican, but they do like familiarity. Returns are a shade higher in years when incumbents are returned to the office. The Democratic cycle, for all its virtues, tends to bring with it a dose of uncertainty. First, about who will win, and then about what victory will do. And uncertainty tends to make financiers nervous. In terms of stock markets, it is hard to say anything concrete about the likely impact of the election. Historically, the S&P 500 volatility has typically been higher in election years than in non-election years, as markets frequently reprice the probability of the future administration policies. Markets have also tended to react more positively in the immediate aftermath of the election of a Republican president, as the party's policies are broadly thought of as more market-friendly. But it is important to note that this is by no means a strong rule of thumb, and that other significant geopolitical and economic events may carry more influence over the market's direction. So that's it for today, guys. Please share this video and hit the like button if you enjoy it, and subscribe to keep watching videos about stock analysis, economics, personal finances, and the most important news around politics and anything that affects our investments. See you in a couple of days.